What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the Sofi stock. I'm going to be showing you guys why, Sofi is one of the most manipulated stocks inside of the market, why all of the articles that are, written about Sofi are total BS. I will also be recommending another stock when we look into some of these earnings that have come out with, a lot of these growth stocks. I'll recommend another stock that's earnings are looking really, really good, better and better. So be sure to smash the like button on this video because it's going to be a really good video. Try and get this video up to 1,500 likes, and don't forget to drop a comment. Guys, this is a very important week. We have a massive week coming up for earnings, and we know that SoFi's earnings are less than 10 days away. So if you find any of this information useful, be sure to subscribe to the channel. We will be keeping you updated daily. Let's get into the video. All right, guys, strap into your seatbelts because this week is going to be hectic. Take a look, guys. Tuesday, this is what you want to be looking at right here. Google, Microsoft, Visa. This is the day that could potentially change the entire market. I mean, imagine if we go for a 3 for 3 beat or a 3 for 3 miss or 0 for 3 miss, guys. I mean, the market could go north or south in literally a blink of an eye after hours Tuesday. So strap into your seatbelts because Tuesday is the day you want to watch. And there's also some bigger earnings coming later on in the week. Thursday, we got Amazon and Apple, but Tuesday is what's really going to kick things off. Another interesting thing to look at, guys, this is the CPI data. We know that these things come faster than a dragster inside of our face every month. I mean, it's literally like in your face. It happens so fast. The next report is literally coming up August 10th, okay? Remember that, August 10th. SoFi's earnings were estimated around August 12th, right? Isn't it strange how they were 2 days behind the CPI report and now they backed their earnings up to August 2nd? So it looks like SoFi wanted to get their earnings out before CPI. You know that, SoFi is a bank. They have a lot of, economic data that they can see. So maybe they either see CPI is going to be really bad, or CPI is going to be another catapult after their earnings. So regardless, I think they didn't want their earnings to be, interfered by CPI data. And that's why they got it out ahead, because their earnings are going to be very, very solid. So that's something to think about, okay? They pushed their earnings up 10 days from the estimated time frame. Now, guys, we're going to be looking at a lot of companies. These companies aren't in, necessarily the exact same sectors. I'm classifying these stocks that we're looking at today. It's about seven to eight companies. These are classified as growth stocks losing money, okay? So I know a lot of people see me doing comparisons on Twitter with SoFi. I just want to be looking at growth stocks that are, having, big market caps, but are losing money, okay? And that's all we're looking at today. What are the best buys for growth stocks that are not profitable right now, okay? We're going to first be looking at Snapchat, okay? Their earnings are the only ones that have the updated Q2 earnings. Everybody else is still sitting back on their Q1 earnings, but most of these companies will be reporting very, very soon. But look at this, guys. We just want to look at net income, okay? That's how much money you either profit or lose, and you could see Snapchat had a net income loss of negative $422 million, almost a $500 million. So this revenue that they have is not cutting it. Take a look at that, guys. Almost a $500 million. We're going to come back and look at these numbers. We also have Snowflake. This company has a massive valuation. We're talking $40, $50 billion. This company reported $400 million in revenue, a lot better than Snapchat, guys, with a net income loss of negative $165 million. So that is a massive jump on net income loss, okay? This is incredibly better than Snapchat, and we saw why Snapchat dropped 40%. They have had the same type of earnings for over a year. We're going to be looking at Robinhood, guys. Robinhood had revenue of around $299 million. Year-over-year growth is down 42%. So this company has stalled out. Not as bad. I mean, Snapchat is, bad, but, Robinhood is way worse on stalling out in growth. Net income loss of negative $392 million. So very, very close to almost $400 million in losses, okay? So these companies we're looking at, were all unicorns. Almost everybody was a unicorn when they IPO. and everybody is losing massive amounts of money. I'm not going to save SoFi for last. We're going to get straight into SoFi, okay? Revenue around 317 million. Insane growth. We're talking 61% growth. Take a look at the net income loss. We are talking the lowest losses out of every company we've looked at so far. Negative $110 million. I'm not saying that's stellar or, absolutely amazing. They're still losing money, but they are not in the $500 million category, okay? Only Snowflake has come anywhere close to, SoFi, okay? About 160 million negative. We have Palantir right here. Revenue, 446 million. 30% growth. So not as explosive growth as SoFi, but take a look at the net income loss. The lowest net income loss out of all the companies we've looked at so far, negative 101 million. So as far as losing money, Palantir is in the, best position as not losing, the most money the fastest, okay? So Palantir looks like they know what they're doing as far as leadership. We have Roblox right here, guys. Revenue 537 million, losses about negative 160 million, right around that same ballpark as a Snowflake, but not as bad as a Snapchat or a Robinhood. So they're in that, middle tier, it looks like. And we have a firm right here, guys. Revenue 354 million. Net income loss only came in at negative 54 million. So this was a stellar quarter for a firm. I don't know exactly if they had some write-offs or some comps or something like that, but this is much better than all the companies that we've looked at so far. So we're just going to start out with losses to show you guys that, SoFi, because I believe SoFi is the best company on this list, is not losing as much money as a lot of these other companies. So we have net income losses right here marked in order, and we could see Robinhood and Snapchat are the growth stocks that are just absolutely insane type of revenue loss. I should have put Snapchat at the top. And then we have Snowflake, Roblox, very, very tight in comparison. And then a little tight battle with SoFi and Palantir around 10 million. And then we have a firm at about negative 54 million. So just take a look at these losses for these growth stocks. I know they're not all in the exact same categories. Most of them are much different. But guys, take a look at this. The losses are massive on some of these companies. I mean, we're talking close to $400 million. If I could recommend two companies, off this list, if we're just looking at, losses right now on the company, going off company management, I like Palantir and SoFi the best, okay? So I'll put Palantir in that, category because, they have really good management. It looks like their CEO knows what they're doing, and they've been, trying to cut back on, other types of costs. Now, guys, this is the second part of the video to make sure we pick the best two companies, okay? I want to talk about stock-based compensation because we know SoFi has somehow gained the media attention as being a diluted pig, stock-based compensation, a cash out, from, many hit pieces. And this hit piece right here is a perfect example. I want you guys to remember what we're reading right now and then put it into comparison at the end of the video, okay? SoFi stock, you have been warned. It's worth noting that SoFi stock-based compensation expenses amounted to roughly $77 million last quarter, which was about 27% of its total revenue, I believe. We're not going to go further on, but I just want you guys to see that. You can see they're warning people. The first headline is the stock-based compensation. We will be comparing every single company on that list that we just went through, net income losses, stock-based compensation. So in this video, we're just doing two comparisons, net income loss, stock-based compensation. We'll start off with Snapchat, okay? Guys, take a look at this. Stock-based compensation, we're talking $318 million smackaroos, okay? We just saw that SoFi was 77 million. So there you go, guys. That's going to get you warmed up to this video, and you can see where I'm already going, okay? Why does SoFi continue to make the headlines as the most diluted company out there with this stock-based compensation? Maybe it's just because I'm on the headlines with SoFi, but I don't hear a lot of these other companies getting bashed like SoFi with stock-based compensation. We have Snowflake. We're going to get right into it. Stock-based compensation, net of amounts capitalized, $172 million. So that is pretty high as well. We're getting, near the $200 million range. So Snowflake, super unicorn. Their market cap went over 150 billion dollars at one point. You can see these guys are cashing out big on their stock-based compensation, probably looking for really good employees out there, trying to find the best. But that's some big money as well. We have SoFi. We just covered it. Share-based compensation expense, $77 million. So SoFi, they have some pretty big expenses. They've came out and said that, we're going to keep our stock-based compensation right about here, but our revenue is also going to be growing, over $500 million per year. So it looks like, SoFi management, as of the last two companies, they got their stock-based compensation under control. We're looking at Palantir right here. This company is growing very good. They had some, decent sized losses of about 101 million. Stock-based compensation, where is it at? Right here, guys. Total stock-based compensation, $149 million, so a little bit lower than Snowflake, but you can see, guys, SoFi is still far under, the last three companies we've looked at, and Snapchat had the bloated stock-based compensation. We have Roblox right here, guys. We can see that Roblox had stock-based compensation expense of about $112 million, so pretty big expense as well, but it's on the lower end, right behind SoFi. We have Robinhood, guys. We're going to be taking a look at stock-based compensation if I can find it real quick. Where is it at? Share-based compensation. We can see share-based compensation here for Robinhood for the end of March 2022 was $373 million. So I believe this is the highest, and you don't really hear a lot of headlines about Robinhood with the stock-based compensation. I mean, Robinhood's been holding up pretty solid. This stock has been going up over $9. It has not crashed, but their stock-based compensation is out of this world. And I believe last but not least, we have a firm with a $280 million stock-based compensation. So pretty high. I do believe that net income loss they had, there was some type of comps or something like that. That's why I put Palantir and SoFi in my top two for net income loss. All right, guys, here's the data right here that we looked at. And we could see that we have Hood, Snap, Affirm, Snowflake, Palantir, Roblox, and SoFi. And we could see that Hood came in at the top, 373 million stock-based compensation. Snap, 318 million. Affirm, 280. Snowflake, 170. Palantir, 149. Roblox, 112. And at the bottom, one of the most hated stock-based compensation stocks, bear bashers, SoFi came in at the bottom end of $77 million. So what does that tell you, guys? They have stock-based compensation, but they have elite management, and they have some of the lowest stock-based compensation. So on top of losses being near the bottom, they have the lowest stock-based compensation. So guys, if I'm going to pick another company, I would pick probably Palantir. It comes in over Roblox, but I just like the management on Palantir. So as you guys can see, if we're talking net income losses and stock-based compensation, I'm going to go with Palantir and SoFi as my top two companies to be buying when you just look at these types of numbers. And that just goes back to a stronger management than the rest. I mean, look at Hood and Snap. They are literally the worst two companies on both of these, lists, guys. That is not good. And then Snowflake is just sitting in the middle of both. So I really like Palantir and SoFi. I just want you guys to see that SoFi has some strong management, and I believe we're going to have some really good earnings heading our way. When this bank charter starts to kick in, I believe we're going to see this net income loss drop to drastically lower numbers by Q4. I mean, I would hope to see, under, $50 million. That would be absolutely insane. I'm telling you right now, a profitable quarter could be heading our way, maybe Q4 or the beginning of 2024. But, this management knows what they're doing. But, guys, the stock-based compensation, that headline we looked at Seeking Alpha, look at this type of stuff, guys. The lowest SBC out of all of these companies. If you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing this video for you guys. SoFi, once again, I believe the management knows what they're doing with their numbers. They're recruiting some of the best employees in the world. Remember, guys, this is going to be a crazy week. Tuesday, you got Google and, a couple other earnings, Visa heading our way. So strap in. It's going to be a very rough week. But understand, SoFi has pushed their earnings ahead to get in front of that CPI data. So there's a lot of things that are coming that could be very good for SoFi if they blow it out with their bank charter. Once again, my name is Kyle. Hope you have a great day.